Hi everybody, this is Osprey from MyChartCoachCom, and in this video we're going to take a look at volatility here. We're going to look at the volatility index and then a couple of the ways that you can trade volatility. So first up we're going to look at VIX here. It did close up 1.7% on Friday. As you can see here, RSI is still at 50, and so it's trying to hang in there. Above 50 is still bullish. You've got Fasto now below 20, so it's oversold on Fasto. Look at the big drop here. So it had peaked out on the 5th and the 6th, and then they drove it straight down. And as you can see, it's hitting that middle Bollinger Band support level, which is the dotted purple line. And so that's going to be the key level to break. If it can get above that 20-day simple moving average, which is the middle Bollinger Band at 1976, that'll be a signal that it's ready to head higher. It has to hold that level. It retraced back to that level. As you can see, it's the dotted purple line, and it's currently below. It needs to get above. So 1976 is the big level. It's trying to bounce here. If you could see it get back above 2234, that's EMA 8. That'll be a signal the chart's really bullish again, and that's when it could head higher. Now if that 1950 level turns into resistance, then you could see a possible pullback all the way down to this 50-day simple moving average at 14. That's the next major support level below. It's holding this support from these two candles here. The close and the open here, the zone is providing support, but if it drops below, you could see a big drop down to 14. So it's going to be really important for the bulls. It gets back above 1976. Fail to do so, and a new downtrend could begin. Look at VXX. This is the S&P 500 VIX short-term futures. This is an ETN, and it does trade options. And as you see here, it had the big pullback from the recent high, where it hit the high here on the 8th, and then it closed above that 300-day simple moving average at 53. That's the big level to turn into support. As you can see, it pulled back after closing above this upper Bollinger Band. That's a solid purple line, all the way back down to the 200-day simple moving average. That's currently at 41.54. That's the red line here. That's the big level to hold. If that level holds, the uptrend should continue. If it drops below that 200-day simple moving average, that would be a red flag, and you could see a drop down to this middle Bollinger Band at 37.33. As long as the middle Bollinger Band is holding, this uptrend's intact. But right now, the key level is it's got to stay above this 200-day simple moving average. Notice it closed just below that level on Thursday, and then above it on Friday. To the upside, what you want to see if you're a bull is a break above EMA 8 at 43.44. Okay, you see the pink and the lime line here. You want to see a break back above that level and then get back above 44, and that would signal that VXX is ready to head higher. Now, if you see it drop below that 200-day simple moving average, if you see 41.50 turn into resistance, that's going to signal more downside risk, and you could see a drop down to that 37 level. Okay, let's look at UVXY. This is a way to play, this is the Ultra VIX short-term futures ETF. And this is a way to play the options as well. And if you look here, it has a very similar pattern to VXX. It closed above, for this chart though, it closed above the 200-day simple moving average. Okay, and that's currently at 25.52. That's the big level to get back up to. Now it pulled all the way back down, and notice it's holding the middle Bollinger Band as well. That's the dotted purple line here at 15.32. If that level holds, the uptrend's still intact. Notice just below is the 100-day simple moving average at 14.29. That's the big level. So it retraced after being above the upper Bollinger Band in the strong uptrend all the way back down to the bottom of the bullish upper Bollinger Band channel. So for the upper Bollinger Band channel, when in a bullish uptrend, you have the upper Bollinger Band as the top of the channel and the middle Bollinger Band is the bottom of the channel. So right now, it just retraced from the top to the bottom, and as long as the bottom of the channel holds, the uptrend should continue. Now, if it drops down below 15 and 15 turns into resistance, that will be your signal that a possible new downtrend is starting. And so what we try to do, if you took gains up here, is we always try to reload off the middle Bollinger Band if support holds. Now you have to be careful reloading off the middle Bollinger Band. You have to use that as your mental stop loss level as well. So because if it breaks below, you want to exit, or you want to go short volatility. So this is a really interesting level for UVXY. If 15 support holds, you could see it make a nice little move here. The big level to break is going to be EMA 8 at 1797. That's basically the $18 level. If you see UVXY back above 18, that's going to be your bullish signal that it's back in play, and that's where you could get a run back up to that 200-day simple moving average. Notice volume did pick up a little bit there on Friday, so you know, it's trying to perk up here. If you look at TVIX, this is another way to play volatility. This is where you know, this is the way most people that trade VIX are trading, that aren't trading the options but are just trading the equity. A lot of people are trading TVIX, and so right now it's holding 50 on RSI. That's good. You know, if you're a bull, you want to see that level stay, you know, hold. You know, it just retraced from above 70 back to 50. Now you're at the bottom of this bullish channel. You need to get back, you know, hold 50 and then make a move back up to 70. You know, pinched right here on Fasto. If the black line crosses that red line to the upside, that's a bull signal. That's a buy signal. Okay, so TVIX failed to close above the 200-day simple moving average when tested. You can see here on the 5th and 6th, it hit that level and pulled back. It's basically at $14. That 1387 level is the big level now to get back to. Notice how it retraced, just like UVXY, all the way back down to that middle Bollinger Band. And as you can see, people are loading off of this level. Notice it's also that 100-day simple moving average. So this is a big reload level, this $7.50 to $8 level. This is where you want to be loading TVIX as long as support holds, okay? So if it drops below 771 and closes below those levels, that's going to be a red flag, and then you don't want to be long. You want to be on the sidelines because it could drop down to that 50-day simple moving average at 646, or you want to, you know, or you want to be short, but you just don't want it. This is so what happens is, you know, you get the big run going, and then it pushes well above. Here's the upper Bollinger Band, well above the upper Bollinger Band, and it finds resistance, and then the candles work back into the bands. And like I said before, when it comes back down to that middle Bollinger Band, if the support level holds, you're getting the good low re-entry point. Now it's a fine line between getting a low re-entry point and then having to exit quickly if support fails to hold. You know, that's the key with the low entry points. You know, support has to hold for it to be a good level. If it breaks, you know, you have to exit quickly because, you know, there could be some downside risk. So 771 holds the 100-day simple moving average in middle Bollinger Band. You could see a reversal, and then what you really want to see is a break back above 9. You have EMAs 4, 8, and 13 lined up here, and so if you see TVIX back above $9 next week, that's going to be your big signal that volatility is back in play. We always look at the volume bars because they give us a clue of what traders are doing. You know, we're just following the money, and that's what we try to do, is just and you know, follow the bigger players, and we do that. You know, the bigger players show their cards through the volume bars, and so as we could see here, there was you know, a declining volume pattern, and then you have a little bump here. It wasn't a big spike, so people aren't loading back into this volatility trade, but it's perking up, and so, you know, it broke the descending you know, declining volume pattern. And then if you see a spike in volume on TVIX and UVXY and VIX on this week, if you see a spike in volume and then a push above those key resistance levels I just pointed out, that's going to be your sign that, okay, volatility is back in play and ready to jump in for another ride. Now if support breaks and you see more red volume, that's going to be a signal to either be short or, you know, buying puts, or be on the sidelines waiting to reload off the next support level. You know, this is a crucial level for volatility. So if you're a volatility trader, you want to be really on top of it this week. It's really coming down, in my opinion, to the middle Bollinger Band on these daily charts, and they have to hold. It's going to tell us here what's going to happen with volatility, whether or not it's going to be out of play, and if it is and it drops below, you've got to think that's going to be bullish for the markets, and we're going to see the markets break out. Now if you've been following my videos that I've been posting over this holiday break, I've been showing bearish pattern after bearish pattern after bearish pattern in multiple sectors, and so we could see a pause in the uptrend after having a 5-day run last week. We could see a red candle tomorrow, and if that happens, that might spike volatility. Okay, so that's why I'm posting this video tonight. I'm trying to stay on top of you know, key levels on the charts, and in my opinion, you know, volatility is getting interesting at this level, so have it on the radar tomorrow. Okay, thank you very much for viewing this video. Please check us out at MyChartCoach.com and join our chat. I'll post the link below the video. Thank you.